สวัสดีค่ะ and welcome to Voice of the Nation. You're with me, Nina Nirasha Malisak Lamir. And for today, we are going to discuss about the age-old and classic investment asset, which is gold. The precious yellow metal has retained its attraction for investors despite the emergence of new types of investment, such as digital assets, including cryptocurrencies and NFTs. But for Thai investors, cryptocurrency has lost much of its shine and controversy over its volatile value and whether it is secure or just a form of gambling. Meanwhile, the Thai Securities and Exchange Commission is struggling to protect traders from the risk of investing in digital coins. So, therefore, gold is the still much preferred asset of many investors. And so for today, let's discuss and explore more about this topic with Mr. Andrew Naylor, the regional CEO for APAC except in China and public policy at the World Gold Council.
Thanks, and great to join you. So my name is Andrew Naylor, and I head up the World Gold Council for Southeast Asia, based in Singapore. But the World Gold Council, it's a global organization representing the gold industry.
So, Mr. Andrew, there are a lot of types of investments right now, but gold remains quite classic for all the years. So, what type of attractive investments are available amid the current international crisis, for example, war and high inflation and economic recession?
Yeah, certainly at the moment, it's a very challenging geopolitical and economic situation globally. And in this kind of environment, investors are very much risk off, and that means that they're looking for safe assets that they can trust. And gold is one of those assets. It's considered a safe haven. If you look at what happened earlier this year in March when Russia invaded Ukraine, you saw a big spike in the gold price. One of the reasons for that is because gold is considered a safe haven asset, but it's certainly not the only reason why people are interested in gold. I think at the moment, investors are also concerned about diversification and actually liquidity, being able to access an investment and liquidate it easily and quickly when you need funding. So all of these are considerations at the moment. What's interesting about gold is it has this sort of dual role, if you like. So in times of economic uncertainty, that's a big driver of gold investment, particularly from institutions. So when uncertainty is higher, you'll see institutional investment in gold historically has picked up. When it comes to consumer demand, though, because gold is both an asset for institutions, central banks, and also commercial investors as well, it's also an asset for consumers. And the drivers of consumer demand are slightly different. It tends to be economic expansion drives consumer demand. So this means that gold it has quite a unique profile, like demand profile, unlike other asset classes, and that means that it behaves very, very differently.
Well, for sure that gold is very attractive, and a lot of investors have confidence in gold, whether its price keep dropping or going up. It depends on the market at that moment. But what about the Thai investors? Because Thailand is one of the country who that still prefer to invest in gold, and a lot of Thai households do buy gold in small amounts, or some people who have ability to afford, they would buy something like in a big amount.
Sure. Yeah, we've just released some consumer insights research looking at exactly that, the behavior of Thai investors when it comes to gold, their perceptions of gold, what sort of product features they like when it comes to gold. And it's no secret that Thailand is a big gold market. It's one of the largest gold markets in Southeast Asia, actually one of the largest in the world when it comes to retail demand for gold. But what we found in our consumer research is that gold, yes, it does play a significant role in household finances, but one of the interesting aspects of our research findings is that Thai investors are very, very savvy. So they are more likely than a lot of others to own a number of different financial products, not just gold. They also save and invest one of the highest proportions of their income in the world. But when it comes specifically to gold, what we found is that Thai investors tend to be quite savvy. They follow the gold price very closely, and they react to it. So you often find quite significant selling when the price is high, for example, because Thais are looking to realize some of the gains and take advantage of the high gold price. When the price goes down, you see a lot more buying. So yes, it does play a role in long-term household finances, and that's the same across all of the markets that we look at. Gold tends to be a longer-term investment, but in Thailand in particular, you also see a bit more of a short-term investment behavior when it comes to gold, or trading behavior when it comes to gold. And so you see Thai investors quite willing to buy and sell gold in the short term to make gains or realize profits.
Well, like how Thai people would say, like, investing in gold is always good, is valuable, is something is touchable, physically visible, and in terms of visibility. But in terms of an expert like you, according to you, investing in gold, what are the actual pros and cons?
Okay, well, starting with the pros. Yeah, you mentioned it's a physical asset. So when you buy physical gold, and there are paper gold products out there, so what I'm talking about is physical gold. When you buy physical gold, you have no credit risk as long as you own it outright. So it's what in the market we call allocated gold. So that's gold that is allocated to your name, either legally or in practice. And in practice, that would mean taking it home or storing it in a vault, but you have the legal title to it. That means there's no credit risk. The gold is yours. You're not a creditor to the person you bought the gold from. Whereas if you have a cash account, for example, you're actually a creditor to the bank. So if you invest in physical gold, you own the gold outright. So either you've taken it home or you hold it on an allocated basis, which means that you have legal title to that gold. There's no credit risk because that gold is yours and yours alone. You're not a creditor to whoever has sold you the gold. That's unlike a lot of other products. So, for example, a bank account, when you have savings, you're actually really a creditor to the bank. You've lent them money and they can do something with it. So the risk profile of a physical gold investment that's allocated to you is very, very different. So that's one of the benefits of gold. But the others are its financial and attributes and performance. And there are four things that we talk about when we think about gold. One is it can outperform over time. So if you look at historically, gold has generated returns and has outperformed other major asset classes. Of course, you get market risk. Some years it's up, some years it's down. But in the longer term, historically, gold has outperformed. So one, it is a source of returns. Secondly, it's an effective or can be an effective portfolio diversifier. It performs very differently to other asset classes. And that's particularly the case in downturns. So in economic downturns, gold becomes less correlated to other major asset classes. And that's what you want as a portfolio diversifier. So that's number two. Linked to that is its ability to protect against inflation. It can be an effective hedge against inflation. That's something we've done a lot of work on. We've looked at gold's performance in different inflationary scenarios. So when inflation is low, when it's medium, when it's high. And in all of those scenarios, gold has outperformed inflation historically. So it can be an effective inflation hedge. And then finally, I would say it's a liquid asset. Over $145 billion of gold is traded every single day. What does that mean for the Thai consumer in practice? It means that you can sell it really easily and buy it really easily. And we all know that. If you go to major shopping malls throughout Thailand, you'll find gold shops, jewelry shops. You can easily buy and sell gold. So it's liquid at a global level, but it's also liquid at the national community level as well. You can easily buy and sell gold when you want to. And that's something that you want when you're thinking about savings, not just its financial performance over time, it's also you want to be able to use it to source emergency or planned finances when you want, and you can do that with gold.
So would that mean, according what you say, would that mean that right now is actually the right moment as well to invest in gold, especially, look at the world is at war right now and high inflations and economic recessions?
Well, it's certainly something to look at. We would never advocate putting all of your investments in one particular asset class. It's important to be diversified. Another element to think about as well when it comes to timing is actually to invest over time, so in incremental amounts over time. So what does that mean? It means you're exposed to the average price of gold, what we'd call dollar cost averaging, and that means you sort of smooth out your exposure to the gold price. So that might be something to think about. When it comes to the main drivers of gold's performance this year, yes, gold is in dollar terms is down year to date, but if you look at other major asset classes, they've fallen even further. But when it comes to gold, there are a number of drivers to think about. One is the headwind, which is certainly interest rates. When interest rates go up, that tends to dampen gold's performance. And that's one of the reasons we've seen gold year to date not performing as well as it has in the past, is because of the global interest rate scenario. We're in a tightening cycle. Something I would say about that is, and our research shows this, that it's at the beginning of a Fed tightening cycle and in the run-up to the start or the commencement of that cycle that has the biggest impact. Over time, after a few months, it starts to get priced in, and gold historically has recovered. I would turn to the tailwinds, and that's inflation. And that is really the big story at the moment. We've seen huge inflation figures across the world, Europe in particular, in the UK at a 40-year high. In the US, we've got record high inflation as well, and this is a concern. And in an inflationary environment, as I mentioned earlier, gold is considered an inflation hedge and tends to perform when you look at its performance historically. So I would say if you're concerned about inflation, gold is something certainly to look at.
So when you mentioned about different type of investments, especially right now we have cryptocurrency, digital assets, compared to gold, could you elaborate more on this factor?
Yeah, so cryptocurrencies, they're certainly playing a bigger role in the financial system and in the investment landscape, that's for sure. Often we get asked the question, is crypto digital gold? Our answer to that is no. They're very, very different asset classes. And actually, if you look at the demand profile for both, it becomes apparent why they're very different. So when you look at the demand profile for gold, in summary, it's jewelry, which is about 40% of demand globally. You've got bar and coin demand. You've got institutional investment demand. And then you've got central banks demand, and finally you have technology demand. And technology demand is around about 7% of annual demand. Central bank buying is about 17% on average, and the rest is jewelry and investment, both retail and institutional. That demand profile is very, very unique to gold. Some of it is pro-cyclical, so consumer demand and industrial demand for gold tends to be more pro-cyclical. Investment demand for gold tends to be counter-cyclical, and central banks is a mix of both. And because of that uniqueness and different drivers behind gold demand, that means it performs differently. And when you look at cryptocurrencies, it's a pure investment play. You don't make jewelry out of it. Central banks are not holding it as a reserve asset, and it's got no industrial application. It's a pure investment play. And that means that it performs very, very differently. It's much more pro-cyclical. And so actually, if you are allocating to crypto, you might want to think about an allocation to gold to offset some of that risk exposure. And then finally, coming to the risk, they're very, very different. With gold, as I'd mentioned, if it's physical and you own it outright, you don't have counterparty risk, or you don't have credit risk. You're not accredited to whoever's sold that gold. You do have market risk, as with any investment asset. The price can go up or down. So that's the same for both. But with crypto, in addition to market risk, you've got some really significant regulatory risk as well, and I would argue counterparty risk. On the regulatory side, we're seeing the regulations evolve. It's unsettled. We haven't really settled on a consistent regulatory environment for crypto. So you've got that regulatory risk exposure. Then you've got the counterparty risk as well. I mean, do you really know and can you really trust who you're buying crypto from? You've got to do a lot of due diligence. So you've got different risk profiles. So whilst it's certainly playing a role, and in finances, individual finances, investment portfolios in the financial system, it's certainly playing a role. But if you are investing in crypto, as I said, you might want to offset some of that risk with an allocation to gold as part of a balanced portfolio.
So I have heard about the digital gold, investing gold online, and everyone can invest in gold by buying via digital applications. Can you please explain more about what is the digital gold assets and how does it work?
Yeah, this is something that is taking off, and actually our consumer research in Thailand did indicate that digital gold products would be quite attractive in the Thai market. When we talk about digital gold, we're not talking about the underlying asset. The underlying asset is still, or should be still, physical gold. When we say digital gold, what we actually mean is the channel for accessing or buying gold. So instead of buying it through a certificate program or buying it through a gold shop, you're buying it online, either through an app or through a website. What does that mean in practice? It means that actually it's more convenient, or can be more convenient. As long as you're buying physical gold, you've still got the same exposure as you would do if you're buying physical gold from a shop. But when it stays online, or when your holdings are within a sort of secure ecosystem, so you've got physical gold, but it's sitting in a vault, you haven't taken it home, it's sitting in a vault somewhere, it actually means that gold is much more liquid. You can easily sell it, and in theory, you should be able to sell it at a higher gold price. So not all products are the same, but if you look at some gold accounts, for example, if you buy physical gold, but you don't take it home, you allow the institution you're buying it from to store it on your behalf. That chain of custody hasn't been broken. So it means that you can sell it back. In theory, you should be able to sell it back to whoever sold it to you, and they will be able to trust it. They don't need to test it. They don't need to verify it, because it hasn't left that chain of custody, if you like. And that means that in theory, in practice, you should achieve a better sale price. Doesn't happen always, but it's something you should be asking about your digital gold provider. What rates, what spreads are you offering for buyback if the gold remains in your ecosystem? So it's certainly a very interesting type of product. In theory, it means that it's more liquid. It means that you'd be able to do more with it. So, for example, there are new products out there where you buy physical gold, but then you can lend that physical gold to the jewelry market, for example. They will give you a rate, so you can earn an income from your holdings. Now, that changes the risk profile, because if you're lending your gold out, there is risk associated with that, but you get compensated for that risk in the form of an interest payment on your gold. So something to think about. How it works in practice, I mean, it varies, but most providers are using distributed ledger technology. They're creating what's called a digital twin of gold. So you have a gold bar or a gold coin. Each has a unique serial number. That serial number is sort of digitalized, if you like, tokenized, and then is traded on a distributed ledger architecture. So there's a link between the physical and the digital, and this is something that is definitely of more of interest. It means that banks, for example, could offer gold products a lot more easily. it means that gold could potentially become more fungible as well over time.
Is it safe?
Well, it really, again, it depends on your counterparty. There are questions that you should be asking, and this is something that we at the World Gold Council are working on. It's something called the Retail Gold Investment Principles, which we've launched globally. But included with that is investor guidance, so guidance for retail investors in gold. And it's basically a list of questions that you should be asking the product provider so that you're comfortable with the underlying asset and how liquid it is, and the marketing of the product and the security and custody of the gold and so on. So it's something that I would encourage people to look at. It's called the Retail Gold Investment Principles. But really, you've got to do your due diligence on the different product provider, just like you would have to do due diligence on if you're buying gold from a jewelry shop or a retail dealer. You want to be able to trust them. So you have to do your due diligence on them. But in theory, there's no reason why digital gold shouldn't be as safe as more traditional channels for accessing the gold market.
So that's differences between traditional gold and digital gold. So according to you, physical gold, traditional gold investment type of investment is still safer than the digital gold?
No, not necessarily. No, it depends on the counterparty. So what I'm saying is, the traditional gold investment is in the retail sense. You go to a gold shop, you buy the gold, jewelry, bar, a coin, you take it home, or sometimes you might store it on your behalf. You still have to trust the dealer. Do you know that the gold that they're selling you is legitimate, that it's not fake gold, that it is as pure as they say it is, and or that it is being sourced responsibly, that the source of that gold is responsible? You have all of those questions with both digital and physical gold. But to help the retail community, I guess, understand some of these differences, that's where we've come in and we've developed the Retail Gold Investment Principles and the complementary guidance, which, as I said, is a sort of a set of questions that investors should be asking of their investments to help them come to a decision on its appropriateness.
So we know that the price of gold is going up and down. Of course, everyone loves it when the price goes up. But when the price goes down, what would be your advice? What can we do with that?
Well, as with any investment, prices go up and down. I would argue that gold is really it's a longer term investment. You tend to make a strategic allocation to gold. So I would hold on to it unless you really need the finances. There's no reason to sell now just because the price has gone down historically. And I'm looking historically. I can't give forecasts. And as we all know, past performance doesn't necessarily play out into the future. But if you look at the past performance of gold, it has over time grown in value in dollar terms and in Thai baht terms.
What would be your gold investments forecast for next year?
Well, I'm not allowed to give a price forecast, but I can talk about where I think demand is coming from and the forecast there. I would say consumer demand is likely to remain quite robust. If you look at the factors that are impacting consumer demand, it's concerns about inflation is number one. Secondly, other asset classes aren't performing quite as well at the moment. So I think that would make gold still an attractive option to many. But then if you look at what happened to retail demand for gold over the last couple of years, the big story was actually COVID, and thankfully we seem to be out of that now. We've overcome that challenge. Consumer spending, despite the global economic headwinds, is starting to recover. And the outlook, particularly in Southeast Asia, is very, very strong. If you look at globally, Europe's not doing too well. Recessions forecast in many major markets. China is not growing as it used to. It's this region, Southeast Asia, Thailand included, that really is the most economically vibrant region at the moment, and that's likely to persist in the future, and that will be supportive of consumer demand for gold.
So where is the area where most people investing in gold? Would it be in ASEAN still?
Globally, I mean, look, gold is a global gold market. When it comes to consumer demand for gold, retail demand for gold, the large markets are predominantly in Asia. But the United States and Germany are also, quite significant retail markets for gold. But the big markets are China, India, Southeast Asia, and within Southeast Asia, Thailand, Vietnam, Indonesia, three largest. When it comes to institutional demand for gold, that's a different picture altogether. London is the biggest trading centre for gold, for example, by far, but it tends to be institutions in the US and Europe that allocate to gold. And then when it comes to the official sector, central banks, that's global. Thailand, the Central Bank of Thailand was a big buyer last year. The Monetary Authority of Singapore was a big buyer last year as well. But central bank demand for gold is global.
Okay, thank you very much, Mr. Andrew, for sharing such informative information, and thank you for joining our program for today. So I wish you to have a good evening.
Thank you. Thanks very much. It was a pleasure to talk to you.
Thank you very much. And that's all for Voice of the Nations for today. Stay tuned with us from Monday to Friday, 8 to 8:30 p.m. From now, I am Nina Nirasha Malisak Lami will have to say goodbye. Thank you very much. สวัสดีค่ะ ขอบคุณค่ะ